In recent years, China's rapid urbanization and economic growth have fueled a booming real estate market. However, beneath the surface of glittering skyscrapers and sprawling urban developments, a housing crisis has been brewing. Despite government interventions, China's housing crisis is still getting worse. But what are the factors contributing to this ongoing issue? And what are the potential repercussions for the global economy? This is the story of China's housing crisis. To understand the roots of China's housing crisis, we need to look back at the country's economic reforms in the late 20th century. As China opened up its economy, urbanization accelerated at an unprecedented pace. Millions of people migrated from rural areas to cities in search of better opportunities, leading to a surge in demand for housing. Real estate quickly became a cornerstone of China's economic growth strategy. Local governments played a crucial role in this boom. They relied heavily on land sales to generate revenue, often selling land to developers at high prices. This created a cycle of rising land and property prices, which local governments were incentivized to maintain. Developers, eager to capitalize on this demand, borrowed heavily to fund massive construction projects, leading to an oversupply of housing in many areas. In the early 2000s, property became a key investment for Chinese households. With limited options for investment, many Chinese citizens saw real estate as a safe and lucrative way to grow their wealth. This speculative buying further inflated property prices, making homes increasingly unaffordable for the average Chinese worker. The gap between housing prices and household incomes widened, creating a bubble that has become increasingly difficult to manage. We saw property prices skyrocket, but wages and income levels couldn't keep up. This imbalance is at the heart of China's housing crisis. In recent years, the Chinese government has taken steps to cool down the overheated real estate market. Measures such as tightening credit for developers, imposing property purchase restrictions, and increasing the supply of affordable housing were introduced to curb speculative buying and stabilize prices. However, these efforts have had mixed results. One of the most significant challenges in addressing the housing crisis is the massive debt accumulated by property developers. Many of China's largest real estate companies, such as Evergrande, borrowed extensively to finance their projects. Evergrande, in particular, became the poster child of China's real estate debt crisis when it defaulted on its debt obligations in 2021. The company's collapse sent shockwaves through the market, highlighting the precarious state of the real estate sector. Evergrande's downfall is just the tip of the iceberg. Other developers, like Kaisa Group and Sunac China, have also faced financial difficulties, raising concerns about a broader systemic crisis. The mounting debt of these developers has created a ripple effect, impacting suppliers, contractors, and the wider economy. The real estate sector, which accounts for a significant portion of China's GDP, is under severe stress, with potential implications for global financial stability. The Chinese government has tried to mitigate the impact of the crisis by providing liquidity support to struggling developers and encouraging mergers and acquisitions within the sector. However, these measures are akin to applying a band-aid to a deep wound. The structural issues within the real estate market, such as over-leveraging and speculative buying, remain unresolved. Another critical factor exacerbating the housing crisis is the issue of unfinished and vacant properties. In many cities, ghost towns have emerged, where developers have started projects but failed to complete them due to financial constraints. These unfinished properties are a stark reminder of the speculative frenzy that gripped the market. Moreover, even completed homes often remain vacant, as investors hold onto properties in anticipation of further price increases. This phenomenon has led to a significant mismatch between housing supply and actual demand. We have a lot of housing units that are either unfinished or unoccupied. This represents wasted resources and contributes to the housing crisis. The social implications of China's housing crisis are also profound. Housing affordability has become a major concern for many Chinese citizens, particularly younger generations. High property prices and the pressure to own a home have led to financial strain and increased household debt. This has in turn dampened consumer spending and contributed to economic uncertainty. The Chinese government's efforts to promote homeownership through subsidized housing and mortgage support have had limited success. The underlying issue of unaffordable housing prices persists, making it difficult for many families to enter the property market. As a result, social inequality is deepening, with wealth increasingly concentrated among those who can afford to invest in real estate. Looking ahead, the outlook for China's housing market remains uncertain. The government's ability to manage the crisis without triggering a broader economic downturn is a critical concern. A collapse in the real estate sector could have far-reaching consequences, not only for China, but for the global economy. One potential consequence of the housing crisis is a slowdown in China's economic growth. The real estate sector has been a major driver of investment and employment, and a significant contraction could lead to job losses and reduced consumer spending. This, in turn, could affect global supply chains and trade, given China's central role in the world economy. Additionally, the financial sector is at risk. Banks and other financial institutions have significant exposure to the real estate market through loans and investments. A wave of defaults by developers and homeowners could lead to a banking crisis, with potential spillover effects on international markets. The Chinese government faces a delicate balancing act. On one hand, it needs to implement reforms to address the structural issues in the housing market. On the other hand, it must avoid actions that could trigger a sharp C-erection in property prices and destabilize the economy. Achieving this balance will require careful policy measures and coordination with financial institutions and developers. In conclusion, China's housing crisis is a complex and multifaceted issue with significant implications for the country's economy and society. Despite government interventions, the crisis continues to worsen, driven by high property prices, mounting debt, and structural imbalances in the market. The future of China's housing market remains uncertain, and the government's ability to navigate this crisis will be crucial in determining its impact on both China and the global economy. Thank you for watching, and if you liked this one, subscribe to Lux Lane, and check out some of our other videos.